Good morning, everyone. Welcome to PhillipCapital morning call. For today, we have few Phillip on the ground and one counter update, Q&M Dental. Then we also have our usual technical analysis for S&P 500 and the macro semiconductor quarterly and the Singapore weekly. This is our usual disclaimer. Please note that the information shared are for the education purposes only. Without further ado, I will pass over to my colleague, Thank you.
Yeah, thanks, Fahmi. I'll be presenting on Semiconductor Quarterly. We published a report this morning. The report title is CapEx Spending Fuels Growth because of increased CapEx guidance by TSMC as well as the hyperscalers. I'll touch on this more later. Next slide, please. Yeah, so overall for semiconductor, we split into 4 different categories: processor, memory, equipment, and foundry. If you look at the chart on the bottom right-hand corner, the red color line represents the year-on-year change of the trailing 12 months revenue. So so the red color line represents processors revenue. It accelerated for the first time after 5 consecutive quarters of decelerating revenue growth. And as for the light blue line, it represents the memory chip companies revenue. So it also accelerated for the first time after 3 consecutive quarters of growth deceleration. And this is being driven by hyperscalers' CapEx spend on AI infrastructure. So for example, they are spending on NVIDIA's GB200 and GB300 GPU as well as AMD's MI350 GPU series. So this when the memory companies' HBM chips are being integrated into the GPU racks itself, it also boosted sales for the memory companies. Yeah, next slide, please. Yeah, so talking about processor first, we do think that the growth upcycle will carry on for at least this year because the 3 big hyperscalers, Google, Meta, and Amazon, guided their combined CapEx to spike up by 72% year-on-year in AI infrastructure for this year itself. And for NVIDIA itself, at GTC 2026, they guided that there is at least $1 trillion of Blackwell and Rubin GPU revenue through to 2027. So on an annualized basis, this represents a CAGR of about 127% for the next 2 years. As for AMD at GTC 2026, they mentioned that there's higher than expected demand for CPU compute for AI. So their next generation Venice CPU is set to ramp in second half of this year, and it has also experienced a strong customer demand. And for AMD's MI4 450 GPU is expected to contribute to revenue in the quarter of this year and a larger volume ramp in the fourth quarter of this year. As for memory, the main driver is because of overwhelming demand from hyperscalers as well as the lack of clean room supply, clean room capacity, which led to the spike in average selling price. So the spike in average selling price is across high bandwidth memory as well as non-high bandwidth memory because as memory companies allocate their resources to produce high bandwidth memory, the non-high bandwidth memory experience a shortage in supply. For example, your handphone memory chips, your PC memory. Yeah, so as you can see on the chart on the right-hand side, that is the DRAM price. It surged by 82% year-on-year in the first 2 months of this year. We do think that there's upside on this DRAM price because it hasn't reached historical peak levels. From the blue color line you can see. And overall into this environment, we do think that Micron is better insulated from the Middle East conflict than SK Hynix and Samsung because Micron has a larger presence in the US, which produces 45% of global helium production. So helium is a critical component used in wafer processing. It is used to cool the wafers. Currently, Qatar in the Middle East produces about 30% of global helium production, so it is under threat if the Straits of Hormuz remain closed. Yeah, so we do think that Micron is better insulated from this risk as compared to its competitors. So next slide, please. Yeah, so talking about equipment, TSMC guided 70 to 80% of this year's CapEx to be allocated to advanced process technology, and also 10 to 20% to be allocated to mask making as well as back-end processors. So we do think that this will drive demand for the equipment companies. As you can see at the chart at the bottom right-hand corner, that is the TSMC's annual capex. We do think that it will still continue on an uptrend because of this demand in the AI, especially with the agentic AI coming up, as well as in the longer term, it will be physical AI. Um, overall, we do think that ASML is better positioned than Applied Material as LUM Research this year to capture equipment orders from memory players because ASML's EUV machine enables single-step exposure as compared to previously it was 3 to 4 exposure for the DUV machine. So because if you imagine for memory companies production line itself, previously they require 3 to 4 machines for the lithography stage. And then now with the EUV machine, they are able to do it within one machine itself. So that helps the memory players save clean room space. That's why there's a spike in EUV orders for ASML from the memory players. So we do think that ASML will be better positioned than Applied Material and LUM Research. For foundry-wise, for TSMC, the 2 nanometer chip has started to ramp. The first 2 months combined revenue accelerated to 30% year on year. As compared to fourth quarter, it was 26% year on year because they report monthly revenue figures. And the derivative for N2, which are stronger in performance, is scheduled for second half this year ramp. Yeah. Next slide, please. Yeah, so overall, this is the valuations and metrics for the semiconductor companies involved in the high-end space. We cover 3 companies, NVIDIA, AMD, and Micron, and we have a buy recommendation for these 3 companies. In terms of forward PE-wise, we do think that they are relatively quite undervalued. For example, NVIDIA's forward PE is 20 times as compared to its peers average of 24 times. And Micron's forward PE is 6.4 times, which is quite undervalued as compared to if you combine processor and memories average forward PE of that's about 14 times. Yeah. So yeah, overall this is the valuations. Yeah. So next slide, please. That's it for semiconductor quarterly. Yeah. So we presented on Nanofilm's Phillip on the ground. I went for their Shanghai site visit. Yeah. Next slide, please. Yeah. So for those who are not familiar, Nanofilm mainly does coating solutions across their different business units. For example, for the advanced material business unit itself, it represents the largest component of their revenue. Advanced material is being split into consumer and industrial. For consumer, they do coating solutions for consumer electronics. As you can see at the images at the bottom left-hand corner, for example, the coating for the watch housing, as well as smartphones, home buttons, as well as volume buttons. I'll explain more later. For industrial-wise, they supply coating technologies for automotive as well as semiconductor. For example, at the image at the bottom itself, they apply the AR film and TAC film to increase durability of the wafers itself. For industrial equipment, they develop coating equipment itself for internal and external BU usage. So this portion may be a bit lumpy because they supply to internal usage as well. For nano fabrication, we did not have a chance to visit this facility because it's located mainly in Vietnam. But yeah, they manufacture nano products used in optical imaging lens as well as sensory components. For their hydrogen unit, they produce fuel cell components for the hydrogen market. Yeah, so overall, as you can see on the table at the top right-hand corner, the advanced material unit takes up the most of their revenue. It increased 16% year on year because of higher demand from their both new and existing customer. So currently, their biggest customer is the most popular smartphone brand. You can call it customer A. So basically, customer A takes up about 60% of their revenue. Previously, it was 78% of their revenue when they first listed. So there's a greater diversification. And as for their new customer, I think they secured supplier status for one of the China's premium handphone brands. Yeah, they did not disclose what it is. Yeah, but they are going to supply watch housing for them. Yeah. Next slide, please. I'll explain more on the products itself. Yeah, so for the coating wise, if you can see on the left side of the screen, they do coating for external parts and also internal parts, which is on the right hand side of the slide. So when we talk about the external parts first, so the usage of this coating is to increase hardness on the external shell of the device itself, as well as to increase durability. For example, like durability from scratch and also durability from corrosion. So this coating are being applied to, for example, the logo, the mesh, speaker mesh itself, as well as the hinge, as you can see at the images at the bottom of the slide. And as for internal parts, on the right hand side, this coating are being used so that it can provide some electrostatic discharge conduct how to say, like you reduce the conductivity of the electrostatic discharge so that the internal electrical components can function normally. Yeah, so the applications are, for example, the mobile phone camera and also the internal electrical components. So the coating are being applied to the components itself to provide some conductivity properties. Yeah, next slide, please. Yeah, so overall for the site visit itself, uh, as you can see at the right-hand side, we saw some assembly, production, and quality inspection on the factory grounds itself. These are not the photos taken from me. These are IR approved image because it's quite stringent in terms of the camera photo taking policies. But yeah, we also saw this on site. So we saw the assembly production of watch casing, watch housing, as well as quality inspection where they use microscopes to check whether there are any small defects or scratches after the watch housings are being produced. And from the and in Shanghai itself, there's two sites. So as you can see in site one itself, there's a few big buildings. So that one is used to house their internal labor. It can house about 800 to 900 dormitories in-house. And the normalized labor is about 1,500. So I'm guessing about 700 to 800 workers are being outsourced. And at the peak, it can reach about 2,000. Yeah, so they are able to outsource labor and based on the fluctuations of the production itself. As for site two, that one is mainly for officers as well as management dormitories. Yeah, so as for management guidance itself, for the advanced material consumer, they receive new watch enclosure qualification. So this one is referring to the watch housing, as mentioned in the previous slide. So they are expecting stronger demand from China and Vietnam. For the advanced material industry itself, they expect double-digit growth from automation and semiconductor, especially the back-end processors. For IEBU, which is the industrial equipment, they expect growth across new energy, automotive, industrial, and semiconductor. And for hydrogen, they expect demand from the China's hydrogen sector. So they are trying to gun for one big contract for the usage of this hydrogen generating device in the China's e-bike market. Yeah. As for our outlook itself, we do see China government placing bigger emphasis on semiconductor ecosystem build-up to be more self-sufficient. So it's across lithography, packaging, materials. And this is also evident in the DUV demand pull in the last 2 years. So we do think that this will provide a tailwind for nanofilm as because the coating technologies are being applied in the circuit board tools, wafer coating, as well as the back-end packaging technologies. And nanofilm currently trades at a 1-year forward PE of 32 times, which is slightly at a discount compared to its peers average. Yeah, so we don't cover nanofilm, it is non-rated, but this is our outlook. Yeah. So that's all from my end. I'll hand over the time to Hashi. Thanks.
Thanks, Iqbal. Yeah, I'll go through Raffles Education, Phillip on the ground, site visit. So some background on Raffles Education. It's a private education group that operates a K-12 network of international schools. Um, yep, and they also have vocational colleges and international and private tertiary institutions. They operate 16 institutions across Asia mainly. So countries like Singapore, China, and Malaysia are one of their stronghold, but they're also expanding in Indonesia, Thailand, as well as India. Um, they also have European exposure. So they have an institution in Italy, and their main business is twofold. First one is operating schools across the region. So this is where they own and operate educational institutions, and they have students amounting to about 18,000 people. Their second business line is leasing of education facilities. So this is under their subsidiary, Oriental University City Holdings, which is listed in Hong Kong. They lease eight education facilities to colleges around the region, and that has a student enrollment of about 10,000 students. So revenue by region, you can see that from 2024 to 2025, the China proportion of revenue has increased because that's where they are trying to grow, and sorry, their ASEAN the ASEAN proportion of revenue has increased because that's where they're trying to grow, and they're trying to trim down on China. Financials wise, you can see that revenue more or less has held stable. It has reduced about 0.7%, but majority of the revenue is coming from the education services, which accounts for about 91% of revenue. And then their rental services revenue accounts for about 9% of revenue, and real estate accounts for less than 1%. They've been largely trying to deleverage, and as a result, their financing costs have also gone down. And we can see that their operating profit and PATMI has increased compared to FY24. PATMI is up to 4.4 million, which is a 118% increase. So with this background, we visited two sites in Johor. First one is Raffles American School. So Raffles American School, it's a tier 1 K-12 school. So tier 1 means they charge a premium for their K-12 education. They're operating at a 25% capacity. So total capacity is 2,000 students. They currently have about 500 students, and they are actively ramping up enrollment. Uh, Chinese and South Korean students make up 50% of total enrollment, and we think the proportion of students from these regions will continue to grow. And apart from these, they are charging about 100,000 per year, and this is at a discount to their peers such as Marlborough College, which is just opposite their facility. So Marlborough is charging about 160,000, and this is largely because of their brand name. Marlborough is a old educational institution with a brand name. Raffles is relatively young, so we think there is still some room for fees increase going forward. So the thing that attracts students and parents to Raffles American School is their niche offering in sports, music, and performing arts. So the school has facilities such as a baseball court where the Singapore national baseball team comes to train in. They also have indoor tennis as well as swimming complexes, all of which have coaches, and they are able to um, get scholarships from US universities, so sports scholarships. And that's something that differentiates Raffles American from all the other schools in the private schools in the region. And yeah, so apart from Raffles American, we also visited Raffles University. So this is more of a mass market offering for for locals in Malaysia. So 85% of enrollment is Malaysians, majority of which are from Johor. So apart from Malaysia, they also have a sizable enrollment from Indonesia. Raffles University provides foundation courses, diploma, as well as degree. And their niche is their interior design course, which is something unique, which is something that's unique to Raffles Uni. Outlook for Raffles Uni is that they are trying to expand into EduCity. EduCity, you can look at it as a college town, where different institutions are at one place sharing facilities. They have 65 acres there. They are planning to sell 20 acres, and they're going to keep the rest to build up the expanded facility for Raffles University. Yeah, so next slide. So we do not have a rating on Raffles Education, but from what we've observed, the firm is really focused on deleveraging their balance sheet. So net debt in 2021 was 300 plus million. And if you have some background on Raffles Education, you know that the firm was ordered to repay their debt at an accelerated pace. And as a result, they faced some challenges in the past, but the firm has been trying to deleverage aggressively now. Their current net debt is about 177 million, which is nearly half of what they had in 2021. They are doing this by asset disposals. So they're disposing Raffles Healthway as well as 51 Merchant Road, which both are garnering about 121 million in proceeds. And they're also doing a greenfield construction in Switzerland. So they're planning to build a hotel, a school, and then they're planning to sell off. So build and sell. And that would further increase their proceeds. And we are expecting for a net cash position in 2026. So based on their effective interest rate, if they're able to pay off this current debt, they will be saving about $3 to $4 million in interest expense. So apart from their balance sheet deleveraging, their focus is on ASEAN expansion. So previously they grew very large in China. So China was their main market, but now they're trying to scale back on China. They're trying to grow in ASEAN. So Singapore, Malaysia, Thailand, Indonesia, these are going to be their core focus markets. The reason why they're trying to move away from China, it's mainly due to the market fundamentals. So there's a very strong regulation in terms of education. The population is declining in China, and the competition is very strong in China. So Raffles Education is trying to find growth elsewhere, and they find that ASEAN is their home base. It's where their HQ is at, so they can grow further. So from what we have observed, Raffles Education has many properties, and from the transactions we have observed in the past, K-12 sector doesn't have many transactions with public multiples, but overall they transact at about 14 to 18x EV/EBITDA. And one transaction that stood out to us in terms of past transaction was Kingsley Edu Group that was acquired by China Maple Leaf. And this was done at a premium multiple. So 8x EV revenue, 32x EV/EBITDA, which is much larger than the range that we observe. And the reason for that was because of the properties that Edu Group owns. So Raffles Education has a similar story. It has a lot of assets, and if they are recorded or if they are marked to market, that would be a huge asset value, which is likely even larger than their market cap. And so for that reason, we think Raffles Education has the potential to trade at similar multiples. And yeah, the table on the right shows the institutions that Raffles Education currently has. You can see that majority are still in China, but they also have a stronghold in Malaysia. In terms of the type of institutions they have universities, K-12, as well as higher education. So it's pretty varied. They're able to cover all types of education, and they're also going to be expanding in Indonesia in terms of building another K-12 institution there. So overall, we think the company is growing. The company is actively deleveraging, and once they are in a net cash position, their strategy will be to shift towards expansion. And ASEAN is the market that they feel is the growth is where the growth sits for them. And yep. So with that, I'll pass on to the next speaker.
Thanks, Hashim. I'll move on to the technicals. Next slide, please. Looking at S&P 500, actually, it logged the fifth consecutive weekly decline. So last week it was down 2.1% on a weekly basis. This being the longest losing streak since 2022, the period during April to May 2022. So last week, in terms of the daily chart, we saw an acceleration in terms of the selling momentum, a bit of a 90-degree drop, especially on Thursday and Friday. And it's quite close to, in terms of quite close to the correction territory, which is almost down 10% from the 7,002 highest level. I think for this week, wise, we could still see some further downside ahead with the next next stronger support area at 6,200 to 6,285 area. So this was the low seen in July to August last year, and resistance likely to hold at the last week's breakdown levels at 6,473 to 6,555 levels. Next slide. Yeah, so next one, we also looked at how the S&P 500 performed following oil crisis in the past. So this table actually shows the time it takes for the market to bottom and what's the maximum drawdown during the wars, and as well as some of the returns in the period after, spanning from the Kuwait War in 1990 to the current Iran war. So you can see that for the past four oil crises, from the Kuwait War to the 12-day war last year, it took on average about 55 days for the market to bottom after the war started, with around a drawdown close to 10%. And then usually in the first week, the returns are negative at averaging minus 0.2%. And progressively, we start to see a rebound in terms of the market. In terms of the current Iran war, the maximum drawdown as of last Friday was 7.6%. And then the 1 week returns was minus 2%. And 1 month returns as of Friday was minus 7.4%. Next slide. Yeah, so some takeaways that we have is that we see during conflicts involving these oil producing regions, the S&P 500 actually takes on average about close to 2 months to bottom, with close to 10% drawdown on average. In the worst case scenarios, it can fall over 17% and it will take over 5 months to bottom, seen during the Kuwait as well as Ukraine wars. Currently, we see a strong potential support at 6,147 points, which was a previous all-time high back February last year. And if the index reaches this level, that will mark about a 10.6% drawdown from them. So that's quite consistent with the average of 9.8% mentioned earlier. And in terms of the current trajectory for the index, it's quite similar to what happened during the Kuwait War, where the market continued to decline past the 1 week mark, and combined with a sharper rise in Brent oil prices. Yeah, so during the Kuwait War, the maximum increase for Brent oil was up about 96%, and for the current Iran war, is up maximum rise was 63% recorded on 9 March. And this actually surpassed on the maximum increases seen in the previous wars in Iraq, Ukraine, as well as the war last year. So with that, we think that there's likely more downside if we compare it to if it follows the trajectory of the Kuwait. So that's all from me. I'll have a time to call for an update on Q&M. Thanks.
Yeah, thanks, Zin. So I'll move on to Q&M, the update that we issued last week, establishing an Asia-Pacific dental franchise. Next slide, because of the acquisitions that they're going to make. So the update is basically the 3 proposed acquisitions that they've announced. If you look on the left, they made one in October, then they announced 2 in March. So what has happened is, after securing the 130 million MTN last year, they've announced at least 3 proposed acquisitions. So you look at the value, this is probably their most aggressive acquisition that they've done. I think they did a a string of acquisitions. Sorry, I don't have the exact dates, but I think it's like 2014, 2015, 2016, that period. Since then, they've not done many, and then now this is probably the most aggressive they are doing, pursuing, and the biggest will be the 130 million that that is pending in Australia. If you look on the left, it's 130 million. The other update. So for us, the benefit of this, if it goes through, is that it can double their earnings. If you look at the bottom PAT, the three acquisitions, based on our estimates, will provide 21 million profit on the first year. Our forecast of their profit this year is about 18 million. I mean, around 18 million. So this can actually double their earnings. Okay, let me just move on again. So there are also operational benefits of the acquisitions. The Australian Dental has 40 clinics now, with 120 dentists. Their aim is to grow it to almost 400 clinics over the next 5 years. I think they'll probably use this as a platform to acquire clinics around Australia. Acquisition and of course organically, but I don't think you can organically go for 10 times. So probably most likely will be acquisitions. In terms of the results that they announced in FY25, the headline earnings was below because they took on a lot of the interest from the MTN, although they not made any acquisitions because the MTN was for acquisitions. So if you strip that out plus the professional fees, you're looking at probably around 90% of estimates. So going back to the acquisition, so like we mentioned, this could boost EPS by 80%. Although we mentioned 100, but most of these acquisitions, we estimate about 40% will be issued via shares at 70 cents. So of course, the share price now 53, so the vendor is willing to take the shares at 70 cents. Our fair value is 95. So how we come up with this number is that what we did was we added the earnings that's coming. Like we mentioned, the EPS will grow by 80. So we added the new EPS, and then we put 25 times PE, and also we put the market value of our sin. Yeah. Of course, that's how we got that 95. But of course, the acquisitions are still at the MOU stage, although I think the terms and conditions has more or less been agreed. It's more on the due diligence, financial due diligence, and so forth, and legal due diligence. So we applied 50% discount. That's how we got like 71 cents. And then the last bullet point, I think the difference right now in the way they've been acquiring. So they've always been growing through acquisitions, but they did organically, I think, the last 5 years. Now they're returning. The difference now is they are stressing more on the merger part. So the share moratorium right now is about 15 years. So I'm not sure how he convinced the vendor he cannot sell until after 15 years. And these shares were issued at 70 cents. And the service agreement is also for 15 years. And of course, the profit guarantee is up to 8 years. Of course, there are clawback mechanisms if you don't hit the profit guarantee. And the final point is that if you look at the acquisitions, you look at the table on the left, the one at the bottom, there's at least 14% earnings growth based on the profit guarantees. Singapore, they didn't announce details of the profit guarantee, but if you look at the Thailand and Australia, you're looking at about 14% growth. So the acquisitions will, of course, give visibility on earnings, and of course, there'll be some earnings growth. But we hope that this thing can be concluded by second quarter. I'm not sure what's the date, maybe May or June. Yeah, I mean, that's our own base case. Okay, thanks. Let's move on to the next. Yeah. So if you look at weekly, quite empty because there's not really many key macro news that came out. But Singapore did release their industrial production, and the numbers are actually very strong. So especially electronics. So if you look at electronics, the overall is only up 3.7 because this includes chemicals, and probably going to collapse in March because all the force majeure on all the chemical plants. But electronics is doing really well, although February is supposed to be New Year, Lunar New Year, but the activity was still robust at 15 and 19. So year to date, electronics is up almost 24%, and semiconductor manufacturing activity is up almost 30%. So manufacturing is basically really robust. I think it's consistent with the export numbers coming out from Singapore for semicons. Yeah. Next slide. So we move on to our tactical views of the market. although there are proclamations of the war ending, I guess we know from who, but the war is still spreading. I think on the ground, I think these are all obvious things, but just to reiterate, the Houthis are joined the fray. Now it's spreading to Yemen, and then Israel sending more ground troops, and then US is committing another 10,000 troops to the Middle East. So in a nutshell, I think based on all this, I think the war is still escalating, and the worry, of course, the tail risk is that there's going to be ground troops to be sent. And based on, and as you heard from what comments Zain just mentioned, I think since the war, the S&P is down about 8%. And if you look at the last two major oil crises, don't talk about the 70s, I mean, just talk about more recent ones, the Kuwait and Ukraine, you're talking about 17% decline from the start of the war before the market troughs. So that we think there is possibly going to be more downside. And also, the bond markets is also not the safe haven. So of course, bonds is supposed to be, you hide out in bonds, but bond yields, especially in the developed markets, if you look at the 10-year yields, they're all, I don't know, 27 high, 18-year high, multi-year highs. I think you can see this for yourself. One thing good is that Singapore interest rates is creeping up, but it's not as high as all these other developed markets. And so what macro interpretation of this is that you are entering to very steep stagflation. So stagflation, no, just to reiterate, I mean, most of you already know, but just that you get low growth and high interest rates. So you can imagine as that you have facing a recession, but interest rates keep climbing. So that's what I mean by stagflation. It's the worst of everything. So from the top down, I think REITs will be the one that will be hurt the most, because if the economy is weak, on paper, I'm not saying every REIT, but I'm just saying on paper, rents will be declining. Then high interest rate, then DPU will be affected because interest rates are high, and then of course valuations will fall. This is the opposite. I mean, if interest rates come down, but under stagflation, when economy is also weak, then you get this additional falling rent. In this kind of scenario, I think banks will be one beneficiary. So banks will benefit because of rising interest rates. The reason is, of course, banks always have excess deposits. The three local banks here, I don't have the latest number, but if I can recall, their loan to deposit for US dollars only like 60%. So they got a lot of extra excess cash. And then high interest rates help them. And of course, volatile capital markets will benefit them for their treasury, because clients will want to hedge more. And of course, there'll be more trading activity. So that will be the beneficiary. And one other thing we think could help banks is that maybe not just specific to Singapore, but globally, is that there is going to be a major capex cycle. So the one area of growth is capital expenditure. Of course, we all know about AI infrastructure. But after the Iran war, we think energy security will be the other driver to capex. So you should expect more renewable spending, more oil infrastructure, more energy infrastructure being built for security reasons. And the third driver is, of course, military spending. So even before the war, there was already accelerated military spending. And you can imagine after this, there'll be even more spending, especially if my guess is South Korea and Japan. Yeah. Okay, then in terms of some of the events, the main one will be the US payrolls coming out. The estimate is 51,000, so we can just watch for that. Some of the events, corporate insights where we have is Takraw. There's actually 2 sessions because of 2 different types of audience. We also have Beng Kwan, if you want to know what the latest on the marine sector. Then if you want to know more about gold, then you can the CNMC gold mine next week, and then the following week, next weekend, we will have our usual SSP. Following weekend, then US, and then the assembly place, which is similar to Collywood, and then Nordic, which also does FPSO and construction and so forth. And then Iron Ore, Southern Alliance. Again, this is open for anyone if you're free, yeah, to listen in. Next slide. So next slides are just charts. So if you look at this is just to, I didn't drag it 20 years ago, otherwise the charts will be actually zigzagging everywhere. But if you look at this, you can just see that interest rates really just took a spike across all the developed countries. The chart on the right is just to show what are market expectations of the Fed fund. So the blue line is the expectation. So market is even thinking of a 50-50 chance of a rate hike now. And you can see it from the bond 2-year bond yields. So the 2-year bond yield seem to have some prediction of where the Fed funds is going to go. So we look at this chart, I think we've shown before, but anyway, even before the Fed started to raise rates, which is the blue line, you notice that the green line already started to rise. So the bond markets, the 2-year bond yields tend to have quite a good forward indicator of where interest rates are, or at least where the Fed funds is. Although there's a lot of volatility. So if you look at 2024, the green line already started to drop even before the Fed funds. But of course, there's a lot of false starts. I mean, sometimes it always goes up to the, but again, this is a very volatile lead indicator. But right now, the market thinks that rates are either flat or could even rise. I mean, next slide. If you look at this, okay, this is just to, okay, I'm not a bond analyst, but anyway, when you look at this, what it does tell me is that the emerging market bonds, this is largely like Mexico, Indonesia, these bonds has probably more attractive performing even better than the developed markets. So which is the obvious. So you look on the right here, emerging markets like Mexico, Turkey, they can't afford to have aggressive spending. So the governments have to be very disciplined in the way they spend. So that's why their deficit spending is, if you look at this, is -4. But you compare to the US, Japan, they're all looking at US especially is about 6. So the fiscal discipline is better. So if there is a bond to purchase, I mean, not to buy it right now, probably the emerging market bonds is probably the better way to buy bonds than developed markets. I mean, based on these charts. Next slide. Oh, okay. So this is I just did this gold thing because I was going to present it in some other event. But anyway, so if you look at gold, of course, the thing right now is what happens when interest rates rise. So the picture is mixed. If you look at this chart, when interest rates come down, of course, in year 2000, gold also rise. Then when interest rates came down, actually sometimes gold also will also drop in the 2013, 13, 14. Then of course, when interest rate rise up, so gold also can go up. So it contrary to what it seems that interest rates on the longer term don't really have much of an impact on gold price. So, but if you look on the right, so the thing that could be happening now is probably central banks almost like going back to the gold standard. So the gold standard was removed in here, the red dot. But since the Russian assets were frozen, I think you can see that central banks continue to accumulate or have more of their reserves in gold. What is the limit? I mean, you do not know. Right now, it's about 20%. I mean, you can argue that there's no right or wrong. You can argue 20 or 30, but there is a pathway for them to at least go up to 20 to 30%, especially with the way the US is growing their fiscal deficit 2 trillion a year, and probably the government debt will probably hit like 40 trillion by this year. So, and I mean, if you're a Chinese, you also want to buy gold to kind of, reduce the value of the US dollar, or at least kind of de-dollarize and make it more obvious, I guess. Okay, but anyway, this is just some comments that we have. Yeah, we can move on to Q&A. Thanks.
Hi. I can take on some questions. First one is, how does Google's double coin affect both Google and Micron stock? Yeah, I think I will answer for the Micron's portion. And I think there's a similar question after that. Sorry. Is Google double coin good for Micron if we apply Givon's paradox? Yeah, so I'll try to answer both at the same time. Yeah, so just to give some context, Google double coin is basically like a algorithm came up by Google to reduce the amount of memory needed in the AI processing workloads. So it reduces the KV cache, which is for example, the warm data being stored in the NAND and non-volatile memory. So the sentiments on the ground is there's a bit of short-term selling of Micron stock because people are afraid that this stronger algorithm and more efficient use of memory can reduce the need for microns, DRAM, and high bandwidth memory. In my opinion, I think the second question, I'm more aligned with the second question, whereby I think the Jevons paradox is may be applied in this case, because basically it means that if things become more efficient, there will be a greater usage of the technology itself. So it will expand the entire market. So I feel I'm not an expert at this algorithm thing, but I feel that it may be a similar story to DeepSeek, whereby initially there may be negative sentiments because DeepSeek showed that the AI models can be processed with a smaller, processing power. But in the end, it expanded the whole market because now smaller enterprises can join in as well. So I do think that we are still at the nascent stage of agentic AI. And we do think that if these kind of technologies come up, I think more people will be interested in joining the AI space, because memory will not be a constraint anymore. Yeah. But that's just my theory. Yeah. How will SK Hynix listing in the US affect Micron's valuations? Yeah, so I think SK Hynix currently trading at a cheaper valuation than Micron. It may be because it's listed in Korea, so there may not be as much liquidity. So, for example, if SK Hynix, my guess is that if US can give it a higher valuation, then the entire memory space may command a higher valuation, which may be beneficial for Micron. Yeah. With surging energy prices and closure of Hormuz, will they impact future earnings of the Asian chip players, for example, TSMC, SK Hynix, and Samsung? Yeah, so for just a bit of context, energy takes up about 5 to 10% of the cost of goods sold by our estimation for the chip makers itself, for example, TSMC as well as the memory makers. So it is still considered a small proportion of the cost of goods sold. I think that the actual drivers of their gross margin expansion currently will still be the increase in the ASP of high bandwidth memory chips as well as non-high bandwidth memory chips. Yeah, so I do think that will offset this potential impact. Is there competition for Nanofilm's AMBU coating solutions, or Nanofilm is the sole supplier for customer A? There is competition. So specifically for customer A, there's 3 suppliers currently. Yeah. Previously there was 4. I think last year there was 4, and then I think the feedback was that customer A wanted to focus more on the hands-on, on the for example, monitoring the quality of the products in the factory line itself. So they cut the 4th supplier. So currently there's 3. Yeah. Despite so-called diversification, Nanofilm stock price has underperformed and tanked for the past many years. Still good to accumulate or take loss. I think, yeah, I think this is a valid question, because I think from 2022 onwards, over the past 3 to 4 years, the stock price hasn't been performing as well. I do feel that it's a bit of management transition issues, because previously the founding CEO, Dr. Shi, he stepped down in 2017. There was a bit of a succession changes, and then right now Dr. Shi has come back and taken the helm again at the start of last year itself. So during the transition phase, there's some gross profit margin impact. I do think it's some supply issue as well as some demand problems from the 2022 Russian-Ukraine war, and also China coming out from COVID. They were a bit slow from the reopening. But I feel that Dr. Shi taking over CEO at the start of last year will be a good story to have, because I think right now management has been they mentioned they have put in steps to monitor the the P&L more closely. For example, setting a P&L for each product and project, and also solving the low-hanging fruits within the production stage itself. For example, changing some vacuum pumps to increase yield. So they are actively putting in steps to improve these gross margins, and I do think it's potentially beneficial for their turnaround story. Yeah. We don't cover nanofilm now, so can't really advise whether it's good to accumulate or take loss. Yeah. But I do think it. I think I'm quite positive about the turnaround story. Yeah. Who are Nanofilm's peers? Yeah, so in our valuations metrics, we use the peers as the Singapore technology companies. For example, Micromechanics, Franken, UMS, AEM. Yeah. So I use those as peers. I mean, they're not exactly comparables, but yeah. How is Power State and Centurion doing in the current war scenario? I'll answer the Centurion portion. Mainly currently Centurion still have about 30+% stake in the Centurion REIT itself. So that one is still their core. I would think their core how to say their core business right now in Singapore's worker dormitory. In the current war scenario, if let's say a recession happens in a worst case scenario, I don't think the Singapore government will pump up more public projects and increase the execution of these public projects so as to support Singapore's GDP in such a scenario. Like for example, in 2008 itself, the amount of public construction projects spiked during the recessionary environment. So I think this will be beneficial for Centurion in such a case because the worker dormitory will be in high demand. Yeah. But currently, I think it is still quite sheltered from the Middle East conflict. Yeah. Kindly share on the Max 7 stocks like Nvidia, Meta, Microsoft. I'll share on the Nvidia portion. Yeah, I think as mentioned just now in our presentation, we are quite positive because we do think that Nvidia still is able to maintain their large market share in AI GPU space, and a lot of hyperscalers are still dependent on Nvidia's GPU itself. Yeah, so that's why they are able to provide such a aggressive revenue guidance of $1 trillion all the way to 2027. Yeah, I think I'm still positive on Nvidia. Yeah, with intense competition, how does Nanofilm plan to mitigate customer concentration risk, and what are their growth prospects for the next 2 to 3 years? Yeah, so I think they are also trying to shift away from the story whereby they are customer A's supplier. They want to shift their story more towards being a supplier in different fields within technology itself. I think they are trying to enter the semiconductor back-end space because with China's the thematic where China is becoming more self-sufficient in semiconductor itself, they do see stronger demand in the back-end space. And their coating technologies can be used in the PCB boards itself, PCB tools. So these tools are being used to drill the holes in the PCB boards itself, and also adjust the electrical components. So with this coating technology, is able to increase the durability of these tools itself. And because of this China's increasing demand in semiconductor, I do think that it's a positive backdrop for Nanofilm. Yeah, so hopefully that answers your question on how they plan to mitigate customer concentration risk, because they are trying to venture more into semiconductor. Yeah. What are their growth prospects for the next 2 to 3 years? Yeah, so end of last year itself, they managed to secure the watch housing product contract from one of China's premium handphone brands. Yeah, so I think I'm quite positive that more of such contracts will come. Yeah, but in terms of their margins, is we still have to look at how the execution part, whether they are able to um, improve their gross margins going forward. Yeah. Sorry. Let me see. I think I hand over to my colleagues for now. Yeah, thanks.
Hi, thank you, Ivan. So I would answer the Microsoft portion for the Max 7 question earlier. So for Microsoft, if you look at the software industry, I think most of the sell-off is being done by the market like indiscriminately, like the sell-off is affecting all the software companies. But we do think that actually the thesis on AI for us still stand. But we think it makes less sense because companies like Microsoft, which is the leader in AI game, like with the Microsoft Copilot, which is being widely applied within all the companies, make use of that. We don't think that market is fairly selling off for companies like Microsoft still. So we still positive on Microsoft because of many reasons actually, like we said in the report itself. Like we think that there's still visibility earnings for Microsoft. Their order books is increasing 1.1 times for this year. So, and then we're expecting more contract coming from increasing use of their Microsoft Copilot user interface for AI. And then there's also the demand for their core cloud business is still exceeding what they could supply. Now they said that they already spent most of their capex on GPU as well as the hiring the AI professionals. Now they're giving more attention to this cloud Azure. So we are expecting higher growth than what the 40% growth that they already give right now. And then coming from the software part, we do think that there's going to be high growth for this year as well for the productivity suite. The reason is because we are expecting this mid-year Office suites increase in price, subscription price would mean high growth for their software suite as well. And most of the concern that we have in the market for the capex, that it's too much and high and all that. And people are tying that if the capex amount is high, but Azure growth is not increasing, that they think that is positive, but we don't think it like that. Now we see that it's like while the capex is increasing, what we think that it is going through the broader offerings. It's not only through the Microsoft Cloud Azure. So eventually it means the group revenue should be higher for them as well. So we are still positive for the Microsoft. We don't think it's fair that the market is selling off, including Microsoft in the software sell-off. So we are still positive for Microsoft. And then for the other question for the Adobe, can you please, let me scroll off. There's a question on Adobe. Can you share on the AI competition pressure that Adobe is facing? Also on the uncertainty on the CEO. So the CEO for Adobe just resigned. No, I think who was the CEO for the last 20 years, I guess. So what they said is that they are in the midst of searching for the new CEO, but at the meantime, the current CEO who just resigning would maintain as the chair of the board and continuing later and would still remain with the management for the transitioning to the new CEO. So I think there's less concern on that front. And then for the AI competition, we do think there's going to be some pressure coming from the, since it is this software, since it is the creative generative company, so there's a lot of competition out there from the smaller front. But then again, like I mentioned in the report, we're still strong with the Adobe because we think it still would remain the resilient creative software provider. And because enterprises prefer to have multi-channel end-to-end creative and marketing tools, not only just like a single channel marketers like what Canva and Figma is providing. So yeah, and then since they already have sticky users who've already used it for many years, since we think that like we mentioned last time as well, that it is more to complement what Adobe is already provided, not only just to it would mean less sense for them to right away transition out from Adobe. And then we do think that the biggest moat that they have is that most of their contents are licensed with Adobe stock. So it's safe. The enterprises users are safe from lawsuit coming from using like what the public generative AI model is providing. Like there's a risk of copyright risk. Then again, for Adobe, the story is while there is a pressure coming from the AI competition, the biggest story is that they are late, they are slow in monetizing, like in the report as well. Like what they are saying that they're now focusing on traction. So we're seeing higher sharp rise in traction, that the usage of their Firefly and also their core creative product is increasing by 30 to 40% year over year, on a quarterly basis. But then again, their monetization is rather slow. That you see that their annual recurring revenue is just not really growing, is flat year over year. But they do think that by the end of this year that they will start monetization faster as the renewal of the earlier user of their AI product is coming to an end. So yeah, but yeah, that's the story for Adobe. The reason of why they are not favorable by the market is because they are really late in monetization, although their users is increasing quite rather quickly. Yeah. So I think that's it for Adobe. Yeah. I think that's all from me. I will pass over to the next presenter.
Hi, I'll answer some of the questions as well. The 1 second, sorry. So the Google affects both Google and Micron stock. I think Iqbal answer for the Micron, but I'll just comment a little bit on the Google side. I think long term wise, it will help with Google share price, of course, because of the better efficiency, which is what all the hyperscaler keep talking about in each earning call, which I think it will be very beneficial to margin. I mean, for now, cloud is about like 30%. And also I think it will be very useful to clear the backlog since that hyperscaler are now facing some of the capacity constraint. Yeah. And then there is another question about Meta and sorry, I can't see it. Yeah. Sorry, now how do you view court ruling against Meta, Google? Are the fundamentals still intact? Buy on Zip. I think for this case, long-term wise, it's still a long way to go since the both company actually mentions that they want to continue to appeal the case. But I think downside is definitely that it kind of opened the precedence for all the relevant court cases, which are like thousands at the moment. But I think long term, in order to make a difference, it has to be more specific on any major changes on the platform by the regulators. Um, and that's why I think the fundamentals still intact because both companies advertising business at the moment are still very strong. And at the moment, for my understanding, is that advertisers are still allocating a very big portion of budget toward these two platforms. And moving forward, they are very focused on this agentic shopping and slash like personalized recommendation, which what Meta and Alphabet spending a lot of money to focus on. And currently they are showing pretty good efficiency in consumer queries and also time spent. Plus, I think for Alphabet side, they still have a very strong momentum in Google Cloud. Their backlog is almost on par with AWS at the moment that they have in-house chips. So that let's say that if the capacity there's some problem in capacity, they kind of like diversify as well. Yeah, that's why I think for both company that the fundamentals still intact. I think that's all for me. I'll pass the time to my colleagues for other questions. Thanks very much.
Hello. So there was a question about Magnificent Seven, which would be our top pick in this current time. So I guess not just me, maybe the other analysts would like to weigh in as well. But I'm just sharing my side of the story. So personally, I would rank Amazon as my top pick right now. Probably followed by Microsoft, because Amazon stand out as it's a more it has a more resilient business mix. Its AWS is already driving monetization. It has less reliance on ad budget. Right now, it's not a good time because of the uncertainty mid-war. So I think a lot of companies are cutting their ad budget. So that makes, I think, Meta and Alphabet a little bit sensitive on that, but it doesn't really affect Amazon. On the other hand, the one to stay clear would be Apple, because Apple is very vulnerable when it comes to this China manufacturing and hardware shipping. So it's very vulnerable mid-war. So that is my pick on that. Maybe the other analysts would like to weigh in as well. I think that's all from my side. Yeah, thank you.
Yeah, let me just take on some questions. So, with the elevated energy prices and Iran war not ending anytime soon, will this translate to more negative impact on DC REITs earnings and DPU? Yeah, so for most of the data center REITs, their energy usage or their electricity needs most of the time is passed through to the tenants. So the landlords or the REITs itself not really impacted, only very marginally impacted as like easily 90% is passed through to tenants for their electricity needs. So near term, not much impact, but possibly in the longer term, as the margins get impacted, the ability to raise rents might be impacted also. So possibly rental growth might start slowing if the electricity rates continue to stay elevated and high. Yeah, so energy prices, yeah, so that is generally the impact. So near term really, yeah, not much because energy needs are passed through. Yeah, I saw few more. Which REITs are best and worst insulated against the Iran war? Yeah, so for REITs, definitely you have to take a look at those REITs who are highly geared. If the leverage is higher, definitely they'll be impacted as definitely they pay higher rates, basically higher interest as the rates remain higher. And also you have to keep a lookout for those REITs with uh the hedging ratio. Like when interest rates are coming down, those who hedge the lower portion of their loan book, they benefited. But as rates possibly start to increase, and if they continue to hedge lower, at a lower percentage, then definitely they'll be impacted by high interest rates. So going forward, we do expect most REITs to, or rather more REITs to start hedging a high proportion of their loan book. Over the past few quarters, yes, the average hedge percentage has dropped to about 72%. Yeah, so we're expecting the average hedge percentage to go back towards the 80%, which is more towards the historical norm. Yeah, and regarding which particular REITs or subsector, definitely hospitality will be impacted. Office also might be impacted as tenants, or rather potential tenants hold back on their expansion plans, so it might take a longer time. But more resilient subsectors would definitely be like suburban retail. Yeah, so that is still retail still remains a topic, especially suburban retail. But discretionary retail might be impacted as tenants start to, or rather as consumers spend less. Yeah, so the biggest impact definitely will be, in our view, will be hospitality. Yeah, I think that's all. I hand over to my colleagues. Thanks.
Okay, thanks. Thanks, Darren. Let me just try to address some questions. For a question from Ian, his question is: do you reckon it's no-brainer DBS penetration into India IPO market will improve net interest income, NIMs, hence tailwind for DBS earnings forward? Any insight factors why neither OCBC nor UOB able to make any inroads? Yeah, so thanks for the question. I didn't realize that DBS is also going to participate in one IPO in India. So it's called Manipur Healthcare, if I'm not mistaken. So this deal is actually, this company that's going for IPO is part of Temasek. Okay. Frankly, the impact on earnings will be minimal. So the reason is probably that like this is just one deal, and I've always had a very not suspicious, a very negative view on the whole corporate finance business model, because most times in reality, to secure a corporate finance deal, it's really dependent on your corporate banking. It's not like your advisory is so fantastic. Everybody also knows how to read the company, the takeover act, right? Everybody, I mean, most lawyers understand and know how to read the takeovers act. I mean, I'm just kidding here, but most times corporate finance deals are secured by corporate banking. So you want to get this M&A deal, IPO deal, you provide me some financing. So this one was a bit peculiar. So this has the Temasek company. So obviously, you just ask your parent for help. The second thing is in India, there's like 30 to 40 other foreign brokers. There's JP Morgan, there's the Goldman Sachs. So all the Bosch bracket is there. So I'm not sure is this going to be a trend. I doubt it. Why your ability to distribute the shares can be better than the rest. Why UOB and OCBC? I don't think they have much presence in India anyway. Yeah. Hi, Paul. What do you think will happen before or after Trump's extended 10-day pause? Okay, so I really not. I really. Uh, I I still don't think he will submit ground troops. Although this is probably going to be the most likely case. I really no idea. I don't think he even knows it himself. But all the various. I think he just wants to push Iran to the negotiating table. That's why he released all these news because he also came out. There's a Financial Times interview saying that he's going to send ground troops. It's all over the news. He's going to send ground troops. So, yeah, I think that before you attack, what you want to let the enemy know. So, my own guess is he's still going to try to negotiate this. Yeah, but again, I think but really not sure. My own is like a 50-50 chance. But I don't think can totally rule out that it's just a negotiating tool. Again, there's not much insight in what I've said. I mean, this is like trying to understand Trump, right? So good luck to that. But yeah. Hi, Paul, do you view the Telechoice news that it submitted a proposal for data center project? Yeah. So Telechoice make a peculiar announcement. Peculiar in the sense that they announced that they are going to be bidding for must be a very huge, otherwise don't make that. So they are announcing that they're bidding for a project. My guess is this project must be so huge, otherwise you don't announce that you're submitting a bid, right? I think hardly see companies announce that they're submitting a bid. So it must be quite a meaningful bid. There's not much news. It said that the bid is in Malaysia, but it also gives them a regional presence. So that's the only thing I can say. But if you look at all their results announcement, they've kind of hinted that they are going into data center or digital infrastructure. So my only guess is that this must be quite a meaningful one. Although they've not said that they're going to win it, but it's a very peculiar thing. I mean, to announce that you're bidding for a project, unless it's really significant. My guess. So yeah, that's what I'm just replicating what they said. I guess. Yeah. Bouncer and Centurion question. I think I leave it to Darren and also Yikban. Ian has another question. Any thoughts on the pullback of gold price in the recent days, despite no sign of Iran war ending soon? Is there any meaningful rotation to US dollar or to US treasuries, even though long-term treasury yields are going up? There are many reasons given. It's not like there's any data to prove anything, but one of the reasons is that central banks, I think it's all over the news. I mean, Turkey central bank has been selling gold to defend the currency. So, and because gold has gone up so much, so I don't rule it out that a lot of emerging market countries might be selling gold to try to support their countries, support their currencies. So that could be one scenario. But I guess our view is that the setup for gold is still intact. So it doesn't really change our view. Yeah, that we don't have a target price because there's no way to value gold. But I think the backdrop level is still positive for them. There could be, like I said, there could be just some central banks selling to defend their own currency. Okay, because Glenn is not here, so let me just try to answer. Any new target price on Singapore banks going forward if the Iran war drags on? Do you expect more headwinds or tailwinds on NIM's earnings for the coming quarters? Yeah, so at this point in time, think the war is generally, because of the impact on interest rates, is generally a tailwind for the banks. But if it stretches on, I mean, if it stretches on for much longer, and you get all these force majeures happening, impacting actual production. Because right now, force majeure, basically a lot of chemical companies has stopped production of feedstock, and this will impact plastics, packaging, and so forth. So unless this really this lasts for another 1 to 2 months, then the SMEs in Singapore might face pressure. Because imagine you can't produce because your supplier can't supply you anything. Then that could create a small NPL cycle for some of the banks, SMEs. Again, this theorizing, I can't give you a number, but this is one sequencing of events that could happen. But at this point in time, I even spoke to some manufacturers. They said there is no impact yet. I mean, they do expect plastic prices or everything to go up. So at this point in time, it still benefits the banks through higher interest rates. What's your view on Sembcorp? Any reason for the recent share price spike while Capital share price is dropping? So for Sembcorp, there is a scenario where they benefit from the rising LNG gas. So Sembcorp has a gas trading arm where they sell LNG. LNG is pegged to Brent. So obviously they're going to benefit and Brent just spike up, right? So they do sell gas to other probably electricity generators, maybe like a YTL. They do sell to others because they import gas. How much they benefit, we do not know because it depends on how much of LNG they ordered before the war. So if they ordered more and they use it to sell for spot, then obviously they're going to benefit tremendously. So they will benefit, but the exact amount I really don't know. I mean, not that they're going to tell me how much excess, because they will probably make projections of how much LNG they're going to import. And of course, those LNG they are not getting from Middle East. It's usually I think even Mozambique, Australia, Southeast Asia. So all this is not affected by Middle East, but how much it depends how much they ordered. But at the same time, I think Shell announced a force majeure. So this might impact their Sunoco plant. But net, I mean, just to cut short, net, they will be a beneficiary of the rise in LNG because of their ability to sell gas on spot rates, or this gas trading business. So yeah. Also, why Keppel is down? Keppel probably down because there was this delay in M1. We still think the deal will go through. I think the overriding thing is that if this deal wouldn't go through, I think the IMDA would have already said no. Why wait, I don't know, 6 months, 12 months, and then only tell a Temasek Link company that, oh, maybe this deal won't go through. Yeah. So you kind of get the hint. So yeah, so I still think this deal will go through. Because if you want to reject, you should just reject it early or not wait, like, I don't know. I think the deal is announced in October, it's already 6 months. Then you tell, oh, I think this deal may not go through. Yeah. Okay, the Chinese division, leave it to Hashim. Hi Paul, is Q&M shrinking Singapore market and focusing on expanding overseas market? Yeah, okay. So they are not shrinking because, as mentioned, they are making a $70 million acquisition of a dental clinic in Singapore. I think they cannot. The reason why they mention MOU, I think is also because they do not want to provide too much details, because then competition might come in and so forth. They have to be a lot of confidentiality on who they're acquiring. But they are still focused on Singapore. But I think there is some reality that Singapore organic growth won't be that strong. It's probably a mid-single digit growth, and the need to do M&As to grow faster is required. And because there are so many small dental clinics, not just in Singapore, in the region, that they think it is a better way to grow. And as most of us would know, I mean, when the bigger you are, especially if you're a healthcare, the better the valuations you get. Then you can attract PE funds and so forth. Yeah. So the thing is that if let's say they become a 40-50 million dollar dental chain across Asia Pacific, it becomes a more attractive target by PE funds and so forth. Compared to your 18 million, you're only in Singapore, right? So I think there is merit, I think, for acquiring across the region. Hi, Paul. I can't understand why US defense stocks like Lockheed Martin, RTX down since the war. Is it a good buy given that the US needs to replenish ammo and increase production? Yeah, it's a good. I didn't realize it was down to so I really don't have the good answer for you. I don't really cover. Maybe people are skeptical that he can pass through the $200 billion budget. And there's also worry that if the Democrats take over, they might cut the budget. Yeah. Because if he lose the midterms, right, then he may not push through the ability to raise the budget for the defense. Because he wants to push the defense spending by 50% in 2027. I do not know. I mean, this is one possibility. So I do not know. But for ST Engineering is different. ST Engineering doesn't depend on US as a customer. Their big customer is Middle East and in Europe, so it doesn't really impact them that much. The other thing that is also Lockheed Martin also rely on commercial airplanes, so that is also another reason. Again, I'm just speculating here. I mean, I don't cover US defense stocks. Yeah. How does force majeure affect stock market vendors? Yeah, force majeure is a big negative for not just the company but the whole global economy. So I think the expectations was that when the war happened, there could be some scheduled maintenance. So maybe if you have a plant, you shut down one line, two lines, but a lot of chemical plants are shutting down the whole thing. So once you shut down, there's a big risk that you cannot. Then it will affect manufacturers. Let's say you're a plastic manufacturer, then you cannot produce plastic resins. And even one small component resins might affect the ability to manufacture cars, toys, anything. I mean, you name it. Of course, not everything comes from Middle East, but it's going to affect production in a lot of things. Packaging. You imagine you got no packaging, how to manufacture anything. Yeah. So this force majeure is very detrimental, can push global economies into recession. So, like we mentioned before, this can be even worse than COVID, because COVID you can still get supply, just that the shipping delay, because not enough ships. But this one is really they shut down. There is no production. That's even worse. Yeah. I'm not saying everything shut down. You can still get it from China, but I'm just saying there is that risk. Hi Paul. Is all type benefiting from Iran war? What is your view now that the share price has gone up? Okay, so if you read our report, I mean the target price already exceeded our 118. Yeah, so the one thing that can help drive their order book. So for those who do not know, Alltech, they help build. They are like a agri-tech company in a way, like engineering. So they help build palm oil refineries. They help build palm oil biodiesel plants around the world. The one that they are targeting is sustainable aviation fuel oil, based on palm oil waste oil, POME. So, with what's happening in the Iran war, the need for energy security might be more elevated. So, what it means is that there will be more demand for biodiesel. That means use palm oil to supply food oil rather than depend on the Middle East. And of course, there are also a lot of SAF plants built in China and so forth, but POME, which is palm oil waste, this is basically waste oil, can be the cheapest source of SAF feedstock. So that is one theory. So they could be benefiting because maybe the demand for SAF plants is accelerating. And SAF plants are, I don't know, a few $100 million US. So these SAF plants is much larger than your typical refinery, maybe 20, 30 million, can be 10 times more. So maybe that is why it's gone up. There is the view that the demand for SAF plants, sustainable aviation fuel oil. Yeah. So like so like when you fly the plane, right, you put a bit of vegetable oil inside. Yeah. But of course everybody laugh, but then right now with the worry over the weaponizing of the Straits, right? Yeah, by either US or Iran, then maybe energy security becomes more important. Okay. This morning Trump said he wants to take the oil in Iran. What do you think the ground invasion will happen? Just curious. it's like I say, it's 50-50 lah. But 51% odds, I just think that he's just negotiating. Like I just keep telling people, and once you put the troops on the island, you're just gonna get shot. I mean, all the soldiers are just gonna. It's like an open target, right? All your soldiers trapped in one island. Yeah, you don't have to be a sharpshooter, also can hit anyone. It's just on a small island. You trap all the soldiers there just to get shot at. Yeah, I'm not sure it's a good idea actually. Please explain why Keppel share price dropped so much. Okay, I think the Keppel is because some worry that the M1 approval may not happen, but our own base case, we think that it will it will happen, I think. Yeah. Yep. Okay. How does rising oil price and hormones affect FPSO stocks? Okay, if you're referring to FPSO stocks, it means floating production storage. No, FPSO basically is like instead of building the production onshore, you like floating, you can just produce oil. You collect all the crude oil, you refine it, clean it, and then you send it to a tanker. So for that, one thesis is that it will benefit Citrum because then Brazil would be more willing to accelerate their FPSO production. I mean, will be more willing to accelerate all their the FIDs or final investment final investment decisions on some of their all projects. So they will benefit, I think. I mean, on paper, we're not sure if it's going to happen, the timing, but it would have benefit the FPSO operators. Yeah. With surging energy prices, Glenn is not here, so let me just try. With surging energy prices, will this benefit the EV and solar panel sectors? Yeah, I think it will benefit the whole energy because energy becomes not just the need. You cannot just rely on cheap oil. There's no more cheap oil or cheap energy. You have to diversify. Probably there is I think governments will be thinking harder to accelerate EV. But EV more or solar panel sector but solar can't happen without the need for battery technology. So battery is the key because otherwise no sunlight and can't be like don't have electricity in your house. So battery technology will be the key, but it will definitely benefit EV and with the renewable sector. Is the war negative for top glove stocks since the nitrile material is made from oil derivatives? Yeah, it is definitely a negative for the nitrile, the synthetic rubber. Yeah. And so for that, the ability to pass it on to customers is the key. Yeah. But you're right. I mean, and then at the same time, the ringgit is strengthening. You get this double whammy. Yeah. Is Keppel a defensive stock in this environment? I think it is for two reasons, mainly because their power plant is still coming up. So Keppel organic growth is depending on infrastructure of data centers. Yeah, and so that and power plants and renewable energy. So that is not impacted by all this whole Iran war. And in the near term, the earnings growth is for this year will be from the new power plant that's coming up, the Keppel Merlimau. Hope I get the right name. Yeah, and also some of the waste to energy, which is even more important now. That means converting all the municipal waste that all of us throw into energy. Those plants are being completed, and they're going to get operating and maintenance fee income, including from the subsea. So there's a visibility on their earnings, so they're not impacted. So in a way, they are defensive. Yeah. Okay, I think I answered quite a bit. Let me let the rest answer before we pass it on to Zane. Yeah. So thanks anyone. Sorry, there's probably like 70 questions. We'll try to answer as many as we can, but hand up to the rest before passing on to Zane. Yeah. Thank you everyone for your questions.
Thanks, Paul. I'll just answer a few questions. I think first question is, does China aviation oil benefit from high oil prices? What's the source of their oil? So whether they benefit, it depends. Yes, because they might make some gains from their trading activity. Oil price has been very volatile, so that's a source of revenue for them. Depends because higher oil prices mean their margins at which they procure their oil also becomes thinner. So source of oil they haven't revealed, but what we understand is that they're trying to diversify their source of oil, and given their scale, we think that they would be able to exploit the regional differences in oil prices. I think what's more significant for China Aviation Oil is that China banned export of refined fuel recently, so there might be some impact on their SAF business, which they mainly supply to Europe. And SAF tends to have a higher margin compared to your conventional jet fuel, about 3 to 5 times. So margins might be affected, but SAF is making up a single digit volume of their total jet fuel trading volume, so we don't think it will be significant. Is central bank buying the most important factor for gold price? Yep, central bank buying is one of the most important factors. I think Paul also touched upon just now. Turkey sold a major portion of their gold, and apart from central bank buying, we think currently what we observe was private credit firms limiting withdrawals. So you might have seen in the news, Blue Owl, Apollo, all of these private credit firms are limiting withdrawals, and there is a liquidity crunch. So what these firms do is to sell off their portion of gold, which is liquid, and they take the proceeds and pay back investors. So there is some institutional selling to cover their investor withdrawals, and that's also leading to some lower gold prices.
Another big buyer is also Tether. So right. So Tether is now the 10th largest holder of gold. So it's not just central bank, but Tether is the stable coins is also another big buyer of gold right now. Yeah, you can continue. Harsh.
Think could the drop in gold prices be driven by rising USD? Yep. So we saw recently how the Middle East conflict led to oil prices rising, and oil prices rising had led to the central bank not cutting interest rates, and as a result, your yields have increased on your US treasuries, and capital has flown to US treasuries, and that had also led to the drop in gold prices. Next question on gold, better to own gold than gold mining. So gold is non-yielding asset. Gold mining stocks like CNMC is yielding, so you're going to be getting dividend as well as capital appreciation. When you own gold through exchanges like Bullion Star, you're also going to be paying storage fees, which is every month, and that can also eat into your returns. But gold mining stocks like CNMC, you're going to be holding it. There wouldn't be any such storage fees whatsoever. So all that you have to look is for is to see whether you're buying into a correct entry point if you are going to be holding it for the near term. So our view is that it's better to purchase gold mining stocks such as CNMC, given that you get yield plus it tracks closely with gold prices.
You buy gold mining stocks also because of the operating leverage. So if gold price goes up 10%, then the earnings from gold mining stocks can be the earnings growth from gold mining multiple that can be 30-40%. Yeah. So that is the main reason when you're exceptionally more bullish on gold, then you enter to gold mining stocks.
I think I think another question. CAO result down, no dividend, any outlook. CAO result was actually up. Its net profit was up about 68%. We are bullish on China aviation oil, even though the current oil price volatility has impacted outlook. But we believe their core business, which is procuring oil and then selling to airports locally, is still intact. Flights will definitely still need jet fuel, and CAO is the main procurer and supplier of jet fuel in the region, in the country. So we think that moat is still holding, and our outlook is still bullish on the stock. I think that's all. I'll pass on to the next speaker.
Yeah, quick one for me. I think there's a question on UMS. Can cover UMS on its potential and setbacks. We don't cover UMS, but I think you mean comment on UMS if I'm right. So basically for UMS, previously the results was flat. They didn't do so well because the customer basically they kept a lot of inventory because the customer indicated to them that the demand was strong. Customer L, I think. Yeah, the new customer. So the demand pulling from their inventory wasn't as fast as they expected. But they say going forward, the pulling of inventory should begin this year until 2027. And I think with TSMC increasing their CapEx guidance, it provides a tailwind for UMS major customers as well, which is customer L and customer A. But I feel that if you want me to compare UMS and Franken, I think Franken has a bit of an edge because ASML, I do think that it has a bit of an edge over Applied Material and Lam Research because of memory companies ordering EUV machines. Applied Material will also is more of a neutral impact because it has other etch and deposition stages involved. But for Lam Research, I think there'll be more of a headwind for Lam Research. I think there's a question on WeHer dropping, any sign of stabilizing. I think I'll leave the TA with Zane. Yeah, thanks, Zane. But I think just a bit of a comment for WeHer. I'm still positive regarding the recurring revenue because worker dorms in the bed capacity will increase by about 60%. I mean, it has increased 60% since last year. So this year we expect occupancy to ramp up, and also from construction's 600 million order book. This is expected to last till 2029. Yeah, so we do see the business still strong. Yeah. I think why it has dropped is because people may be afraid of the risk of Tuasville dormitory, which is their 16,000 worker dormitory, the lease coming to expiry by November this year. So I think we'll get a better indication towards August, about 3 months before. But I'm confident that I mean my theory is that it will be renewed because there's still a strong need for workers in this current environment where major construction projects will take place. Yeah, for example, the Terminal 5, MBS integrated resorts, HDB BTOs, and so on. Yeah, I don't think they will just expire this 16,000 worker accommodation. Yeah. Okay, that's all from my end. Thanks.
Okay, thanks, Iqbal. I'll take on the TA question. So let me just share my screen. Okay, so first question is on a few of the US counters, NVIDIA, Tesla, Broadcom, SPY, and SSO. So first one for NVIDIA, I think there's some near-term weakness. So I think yes, last week price broke down this upper support line, which is quite important, as well as another breakdown was this horizontal support level $172 over there, which it retested a few times. And also we've seen lower highs along the way recently as well. So I think likely we're likely to see more downside hit for Nvidia in the short term. I think it's probably heading towards the next support level at 164, 165 next. And then the next support is at around 159, 158, $159. Next one is on Tesla. Yeah, for Tesla, also we've seen some weakness recently when with the breakdown the key $387 level. So this was this is quite important support level. Then price we tested this a few times since February with lower highs, and then we've seen after the breakdown last week, it did a test finding resistance at the 10 SMA level as well, and closing below the 367, which is the next support level on Friday. So I think with that, we are likely to still see some continued weakness, I think. Next key support level for Tesla, I feel it's at around $355 and followed by around 338 to 340 level. So I think for Tesla, still near term downside momentum. The breakdowns of these recent supports. Next one for Broadcom. I think for Broadcom overall, it's still been a bit weak. Overall, it looks to be this descending broadening wedge kind of pattern. Lower swing highs along the way, and a breakdown of this support level at 308 recently as well. So I think it could retest this 294, 205 swing low level for a bit of a bounce. Yeah. And maybe just do a bit of a sideways, but I think will still be rather weak in terms of the price action. Then next key support level below that is 281 for Broadcom. The next one is on the SPY. Yeah, so for the SPY, last week we saw a breakdown of this quite another important support level at 650. And generally, the resistance has been coming along the 5 and 10-day SMA levels over here, which is this blue and red moving averages. So that's quite an important resistance right now. I don't think that any retest will still hold as resistance. So likely 644 about there will be a short-term resistance. Next support levels that will hold the price for a bit of a temporary bounce, I think is at 629 day support level, and then next one is at 621. So I think it's still a bit of a still quite down trending for now. And we could see some short-term bounces if it touches 621 and 621 and 629 these levels for the SPY. And the next one is on SSO, which is I think it's the leveraged ProShares Ultra S&P 500. So similar kind of chart. But this one, in terms of the levels, I think it's probably at 48.50, and the next one is at around 46.30 as some near-term supports for this SSO. The next one is on Penn United. I think Penn United is still showing very strong price action. Price recently, I think last week, broke out this resistance at 151, which is this consolidation area, and then continuing the uptrend to form new highs. So I think we still expect still continue up, likely to see continue upside ahead. Price is still holding above the 5 SMA levels as well. So in terms of the near-term support, maybe it's around 163, 164 about there, if it does a bit of a pullback. But overall, I think we're still likely to see the uptrend continue for Penn United. And next one is 3988, which is Bank of China. So Bank of China, I think, is also showing, I think, good price action. So price previously has tested this key resistance at around 465 a lot of times. And then overall, in terms of the longer term trend, is an uptrend. And during some of the pullbacks, it has continued to find support along this key trend line support. So that's positive. And price also recently managed to break above this resistance at around is at 476. So I think we're likely to still see some upside ahead. With near-term supports at this 476 to 481 level. So recently, these past 3 days has been finding some resistance at around 489. But if you can break out of that, I think we're still likely to see the uptrend continue. for Bank of China. And the next one is on Bank of America. Yeah, for Bank of America, I think last week, it hit a quite an important support, trendline support level, this blue line over here. So the only time they broke below that was during the Liberation Day sell off last year. So last week was kind of sideways. This support level at 40s, around 46.50 would be quite important. Price, I think, is kind of sideways right now with resistance at $48, $49 about there. So I would think it's kind of range bound for now. Yeah, but this 46.50 needs to hold. If not, we could see more downside towards the next key support level is around 40, around 44.30 to 44.80 area, which was the lowest in July to August last year. So for now, it's slightly kind of sideways. Okay, next one on Sembcorp. Some Singapore counters, Sembcorp, Capital, Comfort, CAO, and WeHer. For Sembcorp Industries, I think their price has rallied a bit recently. Last week also managed to hold above this resistance at 638, kind of sideways, and then continue on the momentum. So I think likely to retest this swing high at 665, and then maybe some resistance from there. Yeah, but short-term support could be at 651, which is the horizontal resistance in the past. Yeah, so I think still okay for now, as long as it holds along the 5 SMA levels now, which is around 644 right now for Sembcorp Industries. Then above 665, the next key resistance I would think is close to $7, psychological level as well. Okay, next one for Keppel. Okay, I think Keppel overall is still still quite a strong uptrend. Overall, it's still maintaining within the channel recently. The channel support is around 1165, which is also this horizontal swing low level. So I think this 1165 level is quite important to hold for it to maintain the uptrend. Right now, probably it's kind of sideways consolidation. I feel resistance likely to be around like 1210 over here. The which is like a breakdown level recently. So most likely it's kind of sideways consolidation for now. And below 1165, the next key support is around close to $11. Next one for Comfort Delgro, I think price probably kind of sideways right now, holding support at 142, and recently kind of just with resistance 147 to 149. So I think will likely be sideways range in this area for Comfort. And China Aviation Oil, I think still showing kind of strong momentum. Price pullback recently, but finding support at the 20 SMA level as well as previous resistance area. This is around the $2 to $2.06 level. So probably we will see a bit of a bounce for now. Some resistance likely to be at this $2.16 to $2.21 area, which was a bit of a consolidation area at about 1 week ago over here. Yeah, so some near-term resistance from there, but I think still okay as long as this recent swing low at $2 still holding. Next one is on WeHer. So I think for WeHer, price is still showing weakness. We can see that the key resistance still lies below the 68 cents level, as well as the 5 and 10 SMEs, which price has still haven't managed to find a footing above. Yeah, so for now, I think we're still likely to see some weakness ahead. Maybe retesting the recent swing low at 64 cents and 63 cents also as support. So this is a support area. Yeah, then below that, the next support is around close to 58 to 59 cents area. So for now, I think still some weakness for now, unless price can get above 68 cents. Next one on CSE Global, GRC, and Oiltech. CSE Global, I think we tested today this swing low 116. So rebound, we're seeing a bit of a rebound from there. I think its resistance for now could be around 124 to 127 for now. And so there could be some near-term resistance from there, or a retest of the 5 to 10 and 20 SME levels, as well as this trend line support that had a breakdown recently. So that's some near-term resistance. And I think price most likely sideways from now, since it rebounded from this important support level today. Next one is on GRC, Global Resource Construction. So for GRC, I think price for now is still some weakness. I think overall price has been fairly recent along the 5 and 10 SMEs. And then it did a retest of a previous resistance at 0.094, I think was last week. So there was a bit of rebound, but still close week at the end of the week. So I think for now, we're still seeing weakness and resistance from probably 0.094 onwards to about 0.099 for now. Yeah, then the next key support, I think next key support for this is probably around 0.088, which tested today. And then next one is probably 0.082 as the next key level. So that's I think still weakness for now, but these are just some key levels to note. And oil tech, I think, is showing great strength. So oil tech above the previous high at 115. So price is still holding above the 5 SMA. I think that will be the short-term support. And 115 likely to be a short-term support as well. So I think we could still see higher highs come as long as it maintains this current moment. Yeah. The next one is city developments. So for city dev, I think price did a retest of the $8 and $8.06, this previous resistance area over here. So did a bit of a bounce, but generally resistance still finding it a bit we have a horizontal resistance level at around 844, which is also the 10 SMA. So there's some resistance for now. Yeah, the price needs to overcome to do a bit more of a rebound. So for now, I would think it's probably some range between this $8 to $8.45 level. Then if you can overcome that, the next key resistance around 870. The next one on geo-energy resources, micromechanics, and CNMC. For geo-energy, I would think still the uptrend is holding. Just looks like a bit of a consolidation phase after a rally. So importantly, the support is still holding at 49 cents, which is previously a resistance, 49 cents to 50.5 cents area. So I think just kind of sideways consolidation right now. In terms of the weekly, it's still maintaining above the 5 cents in the weekly, which is around 51.5 cents about that. So that's still quite bullish for now. Yeah, so I think for now, likely to just kind of sideways first. Then, if you can break above the 50.5 cents again, then we're likely to see another uptrend come again for geo energy. Then for micro mechanics, price also strong momentum recently. So there was a breakout of the bullish flag at 196 last week, and then quite a strong rally recently. So I think short-term support might come from this 220 to 228 area while waiting for the 5 SMEs to catch up as well. So kind of similar price action to the United and oil tech earlier on as well. And for CNMC, I think most likely kind of sideways right now. So price looks like it's finding support around 135 around there. Some resistance probably from 149 to 155 right now. So I would think price might do a bit of a sideways at this area right now. The next one is on BOTZ bots. Yeah, so this is the Global X Robotics AI ETF. So for this ETF, I think overall it's quite a volatile uptrend if you look in terms of the longer term trend. Recently, I think on Friday, it actually retested this support level 32.60. So I think we might see some slight bounce again from this level. I think it's the third time retesting this level. So near-term resistance might come at this 33.60 around this level over here. But overall, I think further on, we might see a breakdown on this level to test maybe 31.30 next as the next, which was a previous range resistance over here. And Fortinet, I think for now it's probably nothing too much. It's quite range bound since the earnings from August last year. Its price has been range bound 75 to 87 right now. So I think nothing much to conclude right now, unless there's a breakdown of this. Unless there's a break of these key levels at 75 and 87, with the next levels at 91, 96, and then below is $70 next. And for Pool Corporation, I think it's still on a downtrend overall for now. Price, since the earnings gap down over here, we're still seeing weakness where breakdown of support has turned into resistance at 210, and price is finding resistance from the short-term 5 and 10 SMAs levels. So now right now resistance is 204, which is also a breakdown of the horizontal level recently. So I would think still likely to see some gradual weakness if the trend continues. Then the next key support level is probably 188. So this is 188 was previously quite important resistance level back in 2020. And next one is the 2800 tracker fund Hong Kong. For this tracker fund, I think we're still seeing some weakness overall. Since the breakdown a few levels like 2650 recent end of February breakdown, then there was a retest turning to resistance, and also this 2530 level recently breakdown of support against resistance as well. So still a downtrend in terms of since the peak over here at the end of January. And we think that most likely we could come back to retest this 2440 swing low level again. Yeah. And yeah, most likely that's then the next support level is around 2370 next for tracker fund. And next one, Zijing Mining. Yeah, for Zijing Mining, I think last week tested this next support level at 3240 about there. There was a bit of rebound towards the test SMA and then some slight pullback. So I think most likely we'll see some slight consolidation with resistance coming at probably 3480 to 3660 about there. So I think we might see some slight consolidation as well. Okay, I'll try, it's close to one. I'll try to take a few more questions on the Singapore names, Singtel, DBS, Propnex, Coca-Cola, and CAT. Okay, for Singtel, I think nothing too much for now. Some short-term weakness as it broke down this very short-term our supply around 503, but nothing much. Just kind of very sideways in terms of the daily chart, which has been quite pretty range bound since February. Because of the weekly chart, we tested the 10 MA weekly 5495 today, so probably will hold as a bit of support from there too. So I think overall still pretty much sideways right now. This one DBS I think is also quite sideways. DBS last week in terms of the price action was recover above this 56 level, and then we're still likely to see some resistance from 57. I think it's 57.50 to $58.10 this area. So I think it's a bit of a range bound right now. And then next one, Propnex. Yeah, Propnex, I think probably sideways right now. Key supports is the recent swing low levels like 164, and the next one is 160. Previous resistance August last year, and resistance of 175, I think. So I think we'll do a bit some sideways consolidation for the time being. And Guoco Land. Yeah, Guoco Land also kind of sideways supports at around 231, 232. then resistance around 247 about there. So pretty much sideways as well. And Sheng Siong, yeah, for Sheng Siong, yeah, price did a bit of recovery recently with a rebound above this key 268 level. So currently is seeing some short-term momentum. I think support could be around 275 to 277 right now. Some resistance I think ahead would be around 285 to 287, this area, which was this breakdown level when it formed this previous high in start of February. And next one, CATL. Yeah, for CATL, I think in terms of the momentum, some pullback right now as price is trading below this 640 horizontal support level, as well as it broke below the 5 SMA levels last week. So I think for now, most likely some sideways from turning to a bit of a sideways from the rally last week. So some resistance could be above 640 to about 663 right now, this area. And then I think support I think will still hold at around 600 to 614 right now. So probably some sideways movement. Yeah, in terms of the weekly chart, I think still okay as it's still holding above 5 SMA in the weekly, which is like 620 right now. Yeah, so probably some sideways movement after a rally, I feel. Okay, I think I'll stop here right now since about 1. There's still quite a bit of questions that I'm unable to answer due to time. But feel free to post in our Poem 3 community. Yeah. So I'll hand over time to Paul if any more comments. Thanks.
Thanks, Zane. Yeah. So thanks everyone. We try to do a hard stop by 1 p.m. So really apologize. I think there's still quite a number of questions. We try to answer as much as we can. And just go to our community chat and you can post it there and we will try to reply to you. Yeah. But again, I want to thanks so much for taking the time to attend this and also taking the time to give us questions. Although I'm assuming we can't answer everything because too many. Yeah, but anyway, thanks again and hope everyone have a good and safe week ahead. Yeah. Thank you, everybody, and take care. Bye bye.